My name is John Paul, DayTradeToWin.com.
It's Friday. Usually Fridays are the day to keep it nice and simple and get out of the day early because as the day continues, we usually have more of a manipulation slowdown as the week ends. So really what I want to do,
We're going to scalp trade the E-mini S&P today using the trade scalper method.
and let me just bring up here the scalper, the trade scalper, and take a look and show you a few things here. All right, looks good. So here is the trade scalper right here. And you see a few long and short trades. Obviously, now as the market opens, I want to see it slow down, get calm, really look at a normal situation before taking a long or short trade. So I'll keep this up.
The software that's included with the program provides all the entries for you. I'm using a 1-minute chart, and this method is taught in its entirety. It's completely mechanical and it is objective, which is very important. And the best part about it is that there's no moving averages, there are no MACDs, there's no conventional indicators whatsoever. That's the good thing about this method. Doesn't matter if you're trading currencies or the US indices or FTSE or DAX or Eurostoxx 50.
NASDAQ, sometimes I'm really more of an E-mini guy, but really the E-mini, the Russell, the NASDAQ, and the other financials for the US, they usually move up and down together. So I like to trade the E-mini S&P personally. It's more of a market I'm comfortable with, but the NASDAQ can also be adapted as it's typically the same. What I don't recommend is the Dow Jones because the Dow Jones is typically only $5 a tick. And so when you look at the Dow Jones, you see the movement and 2-3 ticks doesn't really make anything after commission. The E-mini S&P, $12.50. So I would focus more on the E-mini S&P. The Russell sometimes moves very strong, but they typically move up and down together. The Russell, the NASDAQ, the E-mini, and the Dow. So if you're going to trade a sector, you would trade the sector. You wouldn't trade 5 different commodities or instruments all related to the same thing. Just like oil, heating oil, soybeans, soy meal, they usually move up and down together.
There were a few trades already, a short and a long, and I decided to pull up my dome and show you how I like to scalp the markets.
Here's a long trade. All right. Okay, so first trade, 3 ticks. I'll keep this up.
And remember, when we're scalping the markets, we're not looking for big profits. We're looking for a small snippet, 2-3 ticks at a time. And if you look down, you can see how much profit I'm attempting. The average true range is what I use, and I teach this, and it's in the course in its entirety. It tells you what to expect. And currently, I can expect 3 ticks. When it comes to scalping, I look for 2 or 3 ticks. I'm in, I'm out. I want to be done with this. And 3 ticks is what I want. The stop, on the other hand, is a little bit larger because if I know the market can trade at 3 ticks up or down in this 1 minute, I know I have to have a little bit larger of a stop in order to keep me in the trade. My target is just 3 ticks because the current condition is 3 ticks on the market. Now also, when it comes to scalp trading, you're not going to hold this all day long. So it's important that there's a limited amount of time that you're in the market. Every time that we jump into the market, we're subjecting ourselves to risk. So it's very important that every trade taken has the highest probability of success. We don't want to take trades that looks like or could be, I think. No, we have to have rules. We have to be mechanical. We have to have an exact entry, an exact exit. If the trade's not going to work, we have to know what our stop is.
Now, a lot of people love to scalp, and the scalping method that I teach works. It's not perfect, and I have to say nothing is 100%, but you're able to take a few 3-tick trades throughout the day, let's say 5, 6, and then I would also recommend shutting it down, taking it down. I would not recommend 24 hours a day just scalping, because eventually it's going to come back at you. You're going to get a few losses, and then you're going to give it back. So regardless if it's scalping or what I prefer, trading on a 5-minute chart, I think less sometimes is more. And especially if you try to trade into the afternoon, you're going to give it all back. So I don't recommend, let's say on the scalper, I would say 5, 6 times a day. If you're up for the day, I would stop. And the later in the day that you continue to trade or into the afternoon session, depending on where you are in the world, right? Uh, I think you have a harder chance to make the trades successful. So 5, 6 times, okay. And I also have to say, a lot of people want to jump into this with 5, 10 contracts all at once. You have to work up to it. I really believe that psychologically, if you start off with large numbers right away without maybe the practice or the experience or even testing whatever method or system you're using, sometimes psychologically it's going to get the best of you. You're going to see you lose or make money when it's ticking up, ticking down, ticking up, ticking down. And so I think that it would be prudent to start off with one contract and then work your way up to two, and then stay at 2 contracts and then work your way up to 3, and then stay. And you're actually gaining confidence and knowing that if you have a loss, you're able to recover, and then after you recover, you can then get ahead. So I do recommend when you begin trading for the new traders, don't just jump in. Start off with one, and you have to be consistent. And if you can be consistent with one, you go to 2 and 3 and so on. Okay, so everybody wants to trade 100 or 50 because the math makes, you know, you see a lot of zeros, right, at the end of the day. But it's not that the same way when you try to get filled on larger number of contracts. So if you take a look here and you see here 200, 600, 700, okay. So these are potential contracts that are trying to get filled, and these are potential contracts that are trying to get filled. The value here in the middle is actually what is fulfilling, okay, what is actually happening. So what I want to do is I want to do 50 contracts. When it hits this price or this price or this price, you may not get filled on your 50. Only 1 or 2 or 10 out of your 50 may get filled, and that's called a partial fill. And so what happens is the market hits your partial fill. Okay, so what you're seeing is that the numbers here, they're not accurate. They're not accurate to you trying to get the number that you want, and then all of a sudden you get 3 out of your 20 or 2 out of your 5. There's a lot of partial fills unless you go in at market. So the problem is the partial fills when you enter using a limit order or when you exit using a limit order, you're not going to get filled completely. That's really the largest issue with heavy numbers unless you use market orders. So I would say on a typical day, you can get filled between 10 and 15 without any major issues. The more you go above 15, 20, 25, I think you're going to have a larger problem attempting to get all of your contracts filled when it hits your price. So that would be my problem, the partial fills, especially on the exits, right? I have a limit order, and also speaking on phantom orders, I've spoken about this over the years. I haven't discussed this in a while, so let me just go over what phantom orders are all about. So you see these numbers here, and you try to understand, well, that's pretty good resistance, but the reality is it's very easy to take on, take off, cancel your orders. So electronically, especially with robots doing this, you can realize that the numbers disappear as soon as it gets close to these values. So the 700 may not actually be realistically 700 contracts that want to get filled. As soon as it gets close, sometimes you see it drop down to 400 or 300. It's because they're constantly moving them up and down and up and down. So you can't consider these values that you're seeing here legitimate numbers that are going to be filled when that price gets hit. Instead, you have to say, currently you see 1200 here, but it may change within a second. It disappears, and those are called phantom orders. They're luring a lot of people. And okay, so that's right. April is the next class, and if you're interested in joining, it's 8 weeks. Everything's included, and we spend 2 months together twice a week. So that'd be the next mentorship class, correct? Just look on the website for the details. We'll send you the information and so on and so on. So if you're interested, just let me know and I'll give you the details. So scalping, there's actually two scalping methods that I recommend. One is a counter trend method, the price action scalping method. The other is the trade scalper. So there's two scalping strategies, and I think that if you're going to be a scalper, you have to do obviously a lot of trades multiple times throughout the day.
If you'd like to learn how to scalp trade the markets using the Trade Scalper course and software, please email us at support@daytradetowin.com, or you can call us at 888-607-0008. Until next time, good trading.